will revert. It's a mathematical certainty. So I'm all about shorting this at the proper time. So when I got that little gift on the 15-minute chart on the spiders, I didn't even look at, well, I did look at it, but my point is, it had this breakout on the VXX and it was also coming back in. And so I just pounded on those out of the money VIX calls. And that was the reason. So I just got an email asking, why did you do that? And that's the answer. Because I'm still, based on the longer time frames, as Greg eloquently, reviewed this morning, I'm looking for the shorter time frames to get me price improvement. And on the spiders, I didn't go out to next week to add, but I will into the close. I think I sent this alert like 10 minutes to 2, something like that. And let me shut off my email so you don't hear the dinging. And so I sold them for tomorrow's expiration, the one that I posted in our Telegram. So I did another 10 lot, or 20 lot actually, because I did it in 2 accounts. And I did them far away. I did the 261. Look at this 15-minute chart, folks. And that's why I just love selling premium so much. Sure, your gains limited to the premium received. I get that. And I do directional trades also. But look at this 15-minute chart, which is a microscope of this daily 3-day consolidation. I'm selling the 261. And it was 2 p.m. at the time. So I have 1 day and 2 hours of risk. All it has to do is stay above 261. And I'm not going to let it go that far. My stop is under this low. And then I make $310. So you can go spiders, you can go up, you can go sideways, and you can fall, Mr. Spiders, $6 or $5. And I still make $620 on a 20 lot for 1 day's worth of risk. And, for those of you who, I respect Sosnoff. I mean, I know him well, but and we respectably bash each other because he hates charts, doesn't believe in them, and we believe in them. That's our foundation. But he also vehemently despises selling short-term premium because he doesn't read charts. And he says, oh, the reason I don't is because of gamma risk. Well, let me tell you what gamma is without getting crazy about the definition. Gamma is just measuring the speed of delta, which is a directional risk. He don't read direction because he doesn't know how to read charts. So that's a concern to him, and it's our foundation. So we're chart readers, and we think these statistical odds of this staying above 261 by tomorrow, other than, the Trump craziness and, this Mr. Schizophrenia market, is staggeringly high based upon this daily pattern. So, you all know that because you've been with us, hopefully, for a while. We specialize in selling short-term premium as chart readers because we're getting paid nicely to take short-term risk. And so back here to Greg's comment, nice shakeout, that goes to why I did what I did. And so now I'm just sitting and watching, and I would love for us just to consolidate now at, without a deep retracement on the 15-minute chart. Let's just bobble around for the next 30, 60 minutes. And as long as we hold this high-level consolidation and close near the highs, I'll sell more put spreads for next week. Now, we already have a directional, and I haven't touched it. So the directional is working. I'm just focusing on these income trades short term with the high volatility. And that's all I have to say about that right now. I was just looking at our NEM from yesterday, inside day, but nothing to do there. But I got our gold client into some short puts on that yesterday, so he's happy. Greg, do you have any sectors or stocks of interest that we should take a look at?
Well, I think, after this little shake, I want to see how they hold up right here, because now they're back to the high, which is great. It's what they were supposed to do. And now let's see if they can go sideways for a little while. The best performing sector today is the airlines, which are bouncing from, the crushing that they got.
Yeah, there is an ETF called JETS, JETS, but it is untradable, at least the options.
Yeah, it's very, very low volume.
Yeah. The options are crazy spread. I would not touch it, but I wish they were more liquid.
It's only traded about 35,000 shares today.
Well,
and it's up just over 2%, which is the top sector today.
Let's say so. The ETF manager for JETS, whoever the heck that is making a killing. Whoever does business with him and trades those wide spreads, they can immediately hedge their positions with a huge arbitrage gain, provided that you're trading at the inside market, which is a crazy bid-ask spread. And as you know, Greg, I hate widespread. I mean, we all do, but I wish the SEC would get involved. And it's a disservice to the public to allow these crooks to offer a product where anybody getting filled has a guaranteed screw job on their hand. And that's a defined term. And it's sad.
Well, you know what, Dan? We used to say that exact same thing back in the mid-90s about NASDAQ market makers. And yeah, it was, those big spreads were a detriment, in trying to get filled, because it was much more difficult back then to get filled, meaning if you bid for it, you could probably forget about that, because it, was a manipulated market. But the other side of it was, when you did get filled in those things that had 50 cents and dollar spreads, they would rip $2 and you could sell on the offer, because people are continuing to buy and you offer out into the demand, but the spreads cut both ways. But with options, it doesn't always work so as well, but the tight spreads, great. But
no, and just to add to that, and I agree with everything you said, but one additional fact that exists today that didn't back then, you and I were trading in the 1990s when it was the wild, wild west. Direct access just started, and it was in its infancy. And now 20 years later, with all our sophistication of electronic trading, they're still the same nonsense. So that's what I'm saying. It just is stupid and crazy. But everything is politics and money and greed. So, the ETF manager, you know what I'm saying.
Yep. Energy is slowing down here. It might pull back. We'll see.
Okay, so that's a perfect lead-in, Greg. Let's take a look at XLE. We're long the ETF, and we did a covered call ebook together, and you know, we teach people you leg into a covered call when momentum is slowed and you expect either a pullback or consolidation. Now, the daily's coming out of a big base. It's up a couple days, doji bar, but the hourly is still incredibly bullish.
Change the chart, Dan, so everybody can see what you're talking.
Yep. Sorry. Yeah. So, okay, daily here, bottom left, came out of a base.
That's not it.
Yeah, XLE. Yeah, so we're long the ETF, but here, let me change this to hourly because that's what I'm looking at on my other computer. So when you sell a call option against your position, you're taking in money to lower your cost basis, but you're doing that because you're either happy with the additional, ROI that you're generating, or, you're getting paid while the marathon runner is taking a rest. So we have to ask ourselves, is this the right time? Is this marathon runner tired? Yes or no? If the marathon runner is not tired, then you don't do it yet. If he does look tired, then you can do it. And then you have to ask yourself another question. How long do I think this marathon runner is going to rest? For 1 day, 8 days, 30 days? And then I go to the option market to see what I'm going to get paid for it. So I'm going to do that right now. Because we sell 1 day call options too, just like we're selling 1 day put options. So the stocks, let's just call it 71 bucks. For expiring tomorrow, we could sell a 71.5 call for 18 cents. So here's how you have to mathematically analyze this. If you're agreeing to sell it at $71.50, and then you're taking in 18 cents, your break even for this decision is $71.68. So you would only be doing the wrong thing, so to speak, if this closes above 71.68 tomorrow. But, you say, 18 cents. But again, I think in terms of 10 lots, it's 180 bucks. Do you want to put an additional 180 bucks in your pocket for 1 day? And then keep this in mind. Even if it goes through 71.5, you have not lost money. You still own the stock. And then what we would do if the stock still looked higher, then you could either buy it back to close, or we roll it out to next Friday at maybe the 72.5 calls. So that's my analysis of XLE right now for legging into a covered call. So we still might do it, but I need a little bit more information. Since it's coming out of this big base, ideally, I would like it to sprint higher another day or two, maybe even to the $73 range, and then sell it. But then sometimes I get conflicted also because let's say it goes to 73. In what scenario do you say, okay, I'm going to sell the 73 because it's a climactic sell setup right now, or let me just sell half my position because I got a $5 gain on my hand? Does everyone follow that analysis? And the answer is it depends what type of trade it is to you. If it's a swing trade, then you sell half and you've profited and you move on. If it's a longer term trade, then you have to sit through the pullbacks to get the bigger gains. And that's when we sell the covered call. So that's how we're approaching this trade. But again, as I've said over and over again, you can trade things differently. You do not have to follow everything we're doing to customize it to your trading plan. All right, Spider's still pulling in here, nothing to do. But yeah, XLE, I'm not in the directional myself. I just got a bull put spread on, so nothing for me to do. I will sit through the pullback myself because I sold a May 65-60 put spread, so I got plenty of time. Yeah, hey David. Yep. You were the one that sent me the email. So yeah, feel free to ask any questions, folks. That's what we're here for. But as you know, Greg and I are just going to do our thing like we do every day, and you're going to be the beneficiary of it, both in our discussions and trade ideas. But in the meantime, you're here to learn and profit. So no limits.
I was just going through the sector, the energy sector, to see if anything I could find something that was showing relative weakness that was attractive for an intraday short, but nothing is ripe enough yet.
Yeah, and as you know, I gave CVX as a new trade today.
Yeah.
And it's your fault, because when, you show me all this stuff, I'm like in the candy store, clicking it in there.
I take responsibility. I'm going to flip through the Dow and see what that looks like. Even though, things are holding up well, I'll tell you, which is a huge improvement from the last, prior days where up and ripping right back down again. But comparatively to, say, generally just a bullish day, what is up and holding, the ranges are still relatively narrow. So it's not like wow kind of a day. It's just like, the Dow was up 340 points, but it's kind of like big deal based on the ranges as of late.
Which actually, in my opinion, is kind of amazing in light of all the fear on the street.
They're only afraid at resistance. At support, they're stepping up like, I'll take all you got.
Right. I was talking, more about the the news propaganda, what they're pushing out of fear, not the charts.
Yeah. Well, I get it. It's always been that way, but it's rare for any kind of, I know Trump is a wild card, if you will, but politics just doesn't move on a dime. It's all rhetoric and BS.
Well, and also that's where the old Wall Street maxim comes in that says, markets churn higher on a wall of worry.
Yeah.
There's always something that CNBC is going to point to that's a concern. Have you ever, Greg, in your life heard a commentator, analyst, whatever, say You should buy with reckless abandon, as opposed to, oh, we're cautiously bullish here. It's it's the same canned words. So because you're always worried about something. And Greg, you know this, and my other student, I know it. I'd let them watch CNBC for the first hour just because, we want to know what garbage is being pumped in to make people believe this and that. But particularly the majority of the day, and you know me, Greg, I would turn on the Spanish soap operas because there's these two cute Spanish girls. And
I knew what you were going to say.
no, I'm telling you the truth, and
I believe it.
And I couldn't understand a word they were saying, but they were entertaining. They would, get up there and dance, and their emotion. They were just funny to watch. And I would tell people, and they liked it too, actually. I said, don't listen to NBC. Your information is staring at you. Your two monitor screens, and all matter.
You're cutting out a little.
Yeah, it must be the internet because I'm right in front of Yeti. But yeah, that's all that matters is supply and demand on the charts, not CNBC scaring you. Oh, it's like no, it wasn't Telemundo, maybe? I don't know.
Yeah, that's a Spanish channel.
Yeah. That's what we watched. Telemundo then.
Win looks really good. Earnings on the 24th.
Wow. Yeah, we had that yesterday. Wow. I like that.
They were talking about it on Telemundo. I just caught it.
But how did you know if you can't understand them? Did they show the logo or something?
No, I just saw the Spanish girls dancing around.
No, right. But how did you know they were talking about Win?
I'm kidding.
I know. Okay, look, I think we got a trade on our hands here, Greg. We can sell the 177.5, 8 days. It's $10 wide. This is very juicy. $10 wide, 177 and 167. So I've put it in. I freaking like it. I just want to wait a few more minutes and let's make sure the market holds. All right. Sorry, folks. Here's my win, bottom left. 15-minute chart above a microscope. But look at this wide range bar on wide range bar out of consolidation. This is a bullish gap. I don't know if we'd call that a pro gap, but again, don't ever worry about terminology. But this was a bullish gap after breakdown failure, bottoming tail, gapped over resistance. This is, again, don't worry about terminology, but this is a continuation gap. We definitely don't chase. Came in sloppy, consolidated. It's sloppy. It's building a base of support. The football players today. Do you remember Greg's statement from yesterday about uncertainty being resolved? Today, the uncertainty is resolved if it closes here. And so all we're doing is putting money in our pocket. Here, I showed them this one. So the 177.5 put is, right there. I'd prefer 175, of course, which is a bigger cushion, but then you aren't going to get paid as much. And so that's the trade-off. So this is what I call a tier 1 setup into the close that I'm going to go ahead and just start writing it up and until we give the green light.
I think the tail on the top of it is erroneous. Well, you can say, yeah. Well, no, not your monthly chart. That's the top of that 60-minute tail, because looking at the 5-minute, it looks like a bad tick.
All right, so I'm just writing this up to get it ready. Consider shorting April 20, 177. Now, I would say if the market makes a new high, I'm just going to give the green light on this, regardless of time. We're in the last hour here. All right, so our stop. There's not a perfect stop place. How about yesterday's low?
If this closes this way, Dan, we're not going to want any part of it under today's low. I mean, that would just open up the door to, well, it would be a shock, and prior support isn't likely to hold.
Yep, agree. Yeah, sometimes, 1,000%. No, I agree with you, but 1,000% on the equity. Sometimes I just kind of look and I say, is there a reason to give it any more? But no, with a wide range bar breakout, totally agree. All right, so I have it written up here. It's just a matter of me hitting the go button. And so I'm just watching the spiders and the pullback.
That was a messy 5-minute buy setup on there because it's near the prior high, the spiders and Qs. Nonetheless, buyer stepped up on it.
Yeah, and I'm going to post this for both letters. It's good for both services. We've kind of been more active in our weekly than the main one, and at least in terms of all these income trades. But we're pretty good loaded on both letters.
Earnings on when, John, are on the 24th. So we got time. Dan, if you want, whatever we're doing, I can show my charts and we can see the.
Yeah, why don't you, if you don't mind? Because I'm updating trades and moving all over the place.
Yeah, no problem.
Yeah, and you're the resident expert scanner.
On the let's just make this a little bigger.
All right, so yeah, Greg, I'm getting close to hitting this button here on win because of the market.
I don't think you're gonna. Look, I don't think, because just the way things are, of course. But win pulling back a little bit like this in this pattern.
No, I like it.
I would, yeah, just do it because
Right,
if
right, right. That's what I'm saying. Yep, I just hit it.
this market goes to hell. Alex in YouTube, which I'm pushing on, is short AKR, and there's stuff out. I like that, Alex Alexander. You know, this is real estate REITs are susceptible to, or not susceptible, but correlate with what's happening with interest rates. So, I mean, this is a nice chart, and even though the market's up, this is likely to be one that would be going lower, and it is, and it's weak today, and it's been going sideways all afternoon, and it's definitely a hold. It would look to go lower. Now, this is a slow mover, so anything can fall apart and get real ugly. But just looking at the daily ranges, if I was short this like right here and it went down to the low of the day, I would cover on a break of the low of the day. And you can see the hourly chart. It is a little extended. So now what I was saying about the spiders and cues on the 5 minute, meaning, I was talking this morning about patterns, if you remember, like patterns being maybe 5 to 10 bars, let's say about 10 bars or so, that make up the moment of action within the pattern. So you all recognize this pattern here, this little push up and pull back to the moving averages and reversal. Now, if this was happening above this high, that would be much more attractive. Now, it doesn't mean it can't go through it, but we look at patterns as being, this is the textbook great, my mouth is watering over it versus a variation of that. So point being, you put patterns like this piece of a pattern into the context of a bigger picture. Even this shakeout, as we talked about earlier today, the daily chart looking very good here, or a lot better than it has been. But the hourly chart looks good. And this did exactly what it's supposed to do with the two charts at the top looking like they are. The buyers are supposed to step up into this support area and be able to work their way back up, even if they go sideways or retest here on the 5. And it didn't even do a full retest. It started to go down and reversed back up. So, buyers are getting a bit more aggressive than they have been. I'm going to move this over a little bit. What's happening there from monthly or even the end of or year to date really doesn't mean a whole heck of a lot. A little more easier to see the charts themselves. By the way, these lines on the 5 minute, the red line and the dotted blue line. Right? So that's the red line is today's open and yesterday's close. They tend to be pretty good reference points intraday. Well, that hourly, we got a bullish consolidation. It's a little after 3 o'clock here, and a little selling there. We're going to see if buyers really, want to step up here, because if they do, and they feel, it's more comfortable with all the rhetoric that's been going on here, I would think this would push higher into the close. And if it doesn't, honestly, it kind of opens up the door to bulls getting nervous and running for the exits again. So right now it's just a wait and see. So I have expanded that hourly chart that to make it more visible, the individual bars, because what's to the left of it at this point is irrelevant anyway.
Wow, I finally just got filled on win. That took a while, David, because it was spready. I put the order out and it just there. I heard my bell, my fill bell. Oh, I also got filled on that Google that. So David, just another FYI. Yes, John, I sent it. Yeah, I sent it to both. But David, just an FYI, Google, it took me a while to get filled also because it was spready, but I obviously got filled over lunch. Let's see. I'm guilty of trading some more spready things. Oh, that's me talking. I was about to say, yeah, me too. Yeah, I did Google because Greg guaranteed it that it's going to expire out of the money, and he does that a lot. And so I very rarely have to make him honor his warranty, but Google looks good so far. Yeah, Greg, look at NVIDIA. I was tempted on that this morning to do a put spread for next week. It's still churning.
Yeah. It's damaged goods, but it's holding up at the market. Nice little 5-minute reversal here. So this type of price action, right? And I say that with a disclaimer, meaning anything can change in the moment, especially in this market. But this is the type of price action that communicates that institutions are stepping up to the plate and strongly believe that this market is going higher.
So Greg, I've known you 20 years working together. I know what you're saying, but it might be helpful to elaborate, a little bit for folks that don't know.
I thought it was a pretty clear statement.
No, well, you said this is price action. Point to it. Point to three things. How is this different than something else? I mean, I'll give you one. They're buying dips. No follow through to the downside.
Well, they were doing that. It's just that before the dips were bigger. It was like it'd go up and go all the way back down, and they'd buy the dip again. Now the dips are becoming minuscule, meaning like that 5-minute reversal right there. I mean, what kind of dip is that? I know it's at resistance, so the hesitancy, to continue to buy, but as soon as it went down, they stepped up again. Whereas, here, and they could say this was a doldrums kind of shakeout where, it pulled back. And now as we're getting later in the day where, as we get into the latter parts of the day and those that are not already long start to feel like I'm not going to be able to get in, or it's like, oh, this market's going to pull back and fall apart again like it does every day. And now it's not. And what are you going to do? The clock is ticking. Are you going to participate? Do you think, oh, tomorrow you're going to have a better chance? And if they don't, then they're going to chase it up toward the 50 MA, which is the green line on the upper left chart. So this is what I mean about institutions are now stepping up because they're getting a little nervous about not having a participation in whether it's the spiders or whatever else that is acting well. So, you know, our Apple is consolidating, and look at the hourly reversal, the upper right chart. I tend to forget. Hill Philly girl, Dan, got this live in YouTube, and she's saying, yes, she needs the elaboration, and because I've been doing this for so many years, I kind of take for granted, that who knows or who, that they know what I'm saying. And what seems like obvious to me, obviously isn't obvious to everyone else.
That's why I'm your translator.
Yes, you've been doing that for a long time.
Correct. And I like that name, Hill Philly. We got to get her in our room.
Yeah.
Yeah, we've been very active in our weekly option trader, but that's what we do. When things line up, we increase the risk and frequency, and when they don't, we slow down.
Yeah. So Dan says to me when things are slow, it's like our weekly option traders, you're not giving them any love here.
Right.
And I was like, nothing I can do, Dan. I mean, it is what I see. And if the and a lot of times I see patterns, but it doesn't really equate to being an options trade, meaning the spreads are too big or the liquidity isn't there. So at different times, just like with anything else, like I said yesterday, I said, if things turn around, we're going to find a lot of plays. And other times it's like, licking dirt.
Yeah, if we close strong here, I'm going to be adding to more put spreads on the spiders. They just look so darn good to me, and volatility is still high.
So Hill Philly girl said, how the heck do we know it's institutions? Well, if it was day traders and the institutions were on the sell side, they'd get run over. So to hold at a little tiny pullback where typically, historically, institutions want a bigger pullback, and they will add on the way down because they have a lot of money to put to work. So when a pullback is such a minuscule kind of pullback and things immediately reverse back up again, it's big money that they're stepping up because they're becoming fearful that they're going to miss the move.
All right, I'm adding put spreads. So again, we have plenty of trades open, but I'm just telling you, I'm increasing my bullishness. I'm not going to post them official just because there's no need.
So this was and it's just a peekaboo above this area right now, but this has been the sticking point in the spiders. I can
Correct.
get the line straight right there, and I do not want my line on an angle. That God forbid anybody would think I'm drawing a diagonal line, but anyway, so there was the gap up reversal, there was the push into it. There was yesterday's attempt to go into it the day before and yesterday's push down. And now if The spiders can close above that level. Okay. We have to make some assumptions about the probabilities of the future. So all of the price action I've been talking about and a strong close strongly suggests it's going to go higher. And the next stopping point would be that other green line above in the 50 MA. Now, I always have my other scenarios, and what I'm explaining is so that you understand shock patterns. So I'm long this. I believe it's going higher. This thing gaps down under today's low tomorrow. I'm choking. Not literally, but you know what I mean. It's totally unexpected. That is the essence of a shock and what happens and why shock patterns are so powerful. Whereas a pattern says, this is what I'm going to do. Right? Mr. Market Participant, that you see what's happened over decades. And then tomorrow, Mr. Schizophrenia says, not going to happen. And we're, what's been going on as of late. And it unwinds. And that's why shock patterns, do what they do. And when you say, well, there's support below, it's like, are you going to wait for it to get to support or bet that it's going to hold with such a bearish reversal? And that is why most of the time prices go through areas of support when there's a shock. Salesforce.com looks really good. I think it has earnings coming. I see. Actually, on the 17th, Dan, take a look at that.
Well, 17th is we can't do next week. CRM. Yeah, no, that's a perfect put selling pattern again. So we can't sell a put for next week. But let's see if we can get paid for tomorrow. We could do the 120. Only 24 cents, not worth it. Yeah, these home builders have been our only pain in the side this week.
Yeah.
We got KRE banks moving up, we mentioned earlier.
Yeah, and earnings start tomorrow, so we'll see.
Yeah, go ahead.
I think there is one regional that is reporting. SBSH is reporting tomorrow, and it's up 7% today.
Yeah, I think JP Morgan's tomorrow. That's breaking out. IWM still looks good. Diamonds. Hey, diamonds are a little bit. Well, there's no reason to trade the other ETFs. We're pretty loaded in spiders.
Yeah.
And I just love the juice and the multiple weekly expirations and spiders. I just love that.
Wow. Biotech.
Wow, look at poor BBBY. I don't know if you were listening this morning, Greg, when I talked about people who sell short straddles into earnings because they think the expected move is less than the actual move. And the ones who did that on this got smoked.
So, Dan, what the heck is a straddle? Is that like something you put on a horse?
Well, no, you don't put a straddle on a horse. You straddle the horse.
Uh-huh.
You straddle the horse. So that's actually similar. So you're playing both long and short. So I mean, I think a straddle should. I mean, a straddle is selling an at the money call and put. So you're straddling, the horse or the market. A strangle is like when you strangle your kid because he's been bad. So you're shorting an out of the money call and an out of the money put. And that's why, just visualize your hand around his neck and it's out further strikes. So that's a short strangle. You like that visual aid?
Well, it kind of makes me think, well, Dan doesn't have kids, so he can envision strangling his kid. I mean, not that kids, I mean, I was a little bit of a terror too, but, strangling the child.
Well, I purposely didn't say girlfriend because then, I'd have the government, sending me some visits and emails and things. Okay, Greg, win was great. Can you find us another trade, please?
Wow. Make me work here. All right, let's look at this screen.
Hey, folks, for those of you who have not heard me say it before, Greg is just the absolute most phenomenal scanner I've seen in my life. And he hears me tell the story all the time. We were at the Money Show last year, and I'm like, Greg, we need a trade to put in the letter tonight. And he gave me 3 trades while we were riding down 10 floors in the elevator on his cell phone.
And that's because I have this same program on my phone.
Correct. Right.
You know what I'm going to do, Dan, for those that are in the room here with us that become subscribers that have this program? I'm going to make these scans available to them for free.
Well, that's awful nice of you. But don't just, I think you should get something in return. And I think what we should get in return is that they should give us some good trades that they've found through the scans.
That's right. That's right.
Here, look at Apple, Greg. What about a directional? I know you gave it here, but I'm, for the main letter, I'm looking at another put spread for next week. It just looks phenomenal right here.
I'm long the stock, and I mean the options, sure.
Well, right. So,
and by the way, if anybody took the trade at the time, and it's time to bring the stop up. So the stop initially was here. Let's bring that stop under this low here, under 172. I don't want to get too tight just yet. A close like this strongly suggests it's going to go higher tomorrow. Well, I mean, right now, the target is pretty big, assuming it follows through. So you can see this big bottoming pattern here. Now, I don't know that I'll hold it over the weekend, but right now, I mean, and assuming this market continues to bottom out here, I mean, I think this has the potential to run up toward the prior high. Andre in YouTube, Dan, is asking about ADI, out of the money put spread. I'll look at the chart.
All right. Yeah, I'm just getting this ready.
You know, Andre, I'll see what Dan says, but looking at this chart, I think it would be too far away. I mean, I like the idea of the put spread, but I think it's unlikely that something would be available with premiums where you would want it to be under these lows here. And getting tighter than that, I mean, you could go under this low, under one, I guess under one, the 89-ish, because it shouldn't go down there. But so it would all look, if the premiums were such that it was going to expire tomorrow, then I would consider it. But I'm not, going out, 20 or 30 days. No. Let's go through here.
That was my Apple fill. That took a minute too, because I always put them in at midpoint. But if I really want it, then I gotta, sit there and adjust it and take a penny less.
There's another REIT. These things typically they move together. That a little extended, like that other one. I think it was AKS that you asked about before. Someone in YouTube asked. Yeah, and the TBT double bottoming here on the daily.
All right, Apple posted. All right, so now I'm back. You said ADI, somebody's asking about?
It's too far away, I think. Yeah, it was ADI.
Yeah, I mean, great pattern. So if you can get juice, how long was he asking for?
A couple of hours. I'm kidding. I said, if it was tomorrow, I would be interested in it, but it's not the kind of pattern that if I had to go out 30 days, I'd, be interested in that kind of a put spread.
Yeah, and 8 days, you're only it's 15 by a quarter. So even if you got filled at 20, using my rough math, that's only a quarter of 1%. So yeah, not interested.
These REITs are getting shellacked today.
Well, so are our home buildings. So that's, interest rate.
Yeah.
TBT. Hey, do you want to let's check out a put there. But TBT has drag because it's a ultra. But so I'll look at TBT and TLT. So the 36 put is only a dime for next week. Wow. But we could go out to May if you're still bullish on interest rates. The 36 put for May is 43 cents. So that's about 1.25%.
Let's see what happens with the banks tomorrow.
Okay. So did you find us another trade?
Kind of like Boeing here.
Yeah, he's juicy. Let me look. Yeah, we did knock. I just closed knock. All right, so we could do 3.25 for tomorrow. There's no juice. 3.25 for next week is juice. Is there earnings?
25th.
Yeah, no, we're good. How about the 320? 320, 310 for 80 cents. 8 days.
I like it.
There you got it.
There you go. I can take a little break now.
Yes.
So roughly. So those that are watching on YouTube, if you're not familiar with credit spreads, and what we're looking at here is selling this put spread, the 320, 310 for 8 days. And it's based on this pattern and this reversal here, which suggests it can go higher. And of course, we do have to deal with that resistance right there. But since this isn't a directional trade, it can go up there and just hang out and chop around. So for 8 days, as long as it stays above here, you get paid.
That was perfect.
There you go. Now, if the market gets ugly, and I got to see now, this is what I love about this software. Now, I'm not interested in paychecks at this moment, but I'm thinking if the market gets weaker, this dog can go lower. I'm just going to click on the star right there. For what I think is bearish, I'm going to put an alert there. But now, in one of my pages here, paycheck is now in the red box that I'll go back to. So if the market gets ugly for whatever reason, I'll just go and check out Mr. Paycheck and see if he'll give me one.
Hey, that was funny.
Dropbox didn't hold up. I put it in the green box today.
What does a green box mean?
That means going to be some Benjamins coming, maybe. Herbalife. But it's interesting that they're not participating much. I put these in yesterday. MRO, a reversal day. So this could be a go-to tomorrow if it follows through. And ATR kind of popped up and went nowhere. But, it's not a big volume stock, so. John and YouTube, Dan says he sees BA spread 72 by 78.
The midpoint, let me see. It was 78 when I posted it. Let me check. And sometimes, even though I'm looking at the midpoint at the time, the market maker sees an order coming in and he'll tighten it. Okay, I just got filled on my Boeing. I just got filled. So, but yeah, I'll look again. But yeah, I mean, whenever I post something, it is what it is when I post it. And if the stock runs and see Boeing has rallied 50 cents from the time that we've been talking about. Mm-hmm. Many times they come in and people get price improvement. I get emails, hey, Dan, this is 10 cents higher than when you posted it. Is it okay? I'm like, of course, you got price improvement because it came in. No, it's still midpoint 78, but that doesn't mean you'll get filled, but that's the midpoint. All right, it looks like they don't want to blast into the close, so I think we're done for now. It's just my prediction.
Well, Boeing's coming in a little bit here. I'm just posting in YouTube what was posted in the trade sheet. So for those that are there, that's what we posted. So this is a moment in time where you say, you know what, just close this market down right now. So there's still this hesitancy. It held up really well today, but you can see that little poke above the hourly highs there. That was sold into. So market is still nervous. Yeah. Well, Intel's up a lot. Still Philly girls asking about Microsoft and Intel. They're up, but they have earnings on the 26th if they'd be good for a bull put spread. So it's up at resistance now, and that typically, it's far away. Even if you could get something that far away, that would be one question. But we like to get those put spreads initiated when the move starts coming off of the low versus it already having moved up toward the resistance area.
Well, there's some selling here, so I'm glad we are sidelined right now. We got plenty of inventory.
Yeah.
Now, did you observe that word I just used, inventory? That's all stock is. Inventory that we're buying and selling and making money by turning over the inventory, just like Macy's does with their, with their inventory. We don't get married to a stock like, oh, Intel, buy and hold. They have such great semiconductors. I don't care what you make.
That's a good example. I mean, some stocks, like when they move up and down a lot, Procter and Gamble or Johnson and Johnson have done great for decades. But, you mentioned Intel, and you look at a long-term chart of that, and after 2000, if you were trying to say, hey, it's Intel, and you bought it up at $60, you're getting close to break even after how many years? Going into 20 years.
Oh yeah, I mean buy and hold, but then our response to that, well, my response is twofold. You sit through some pain and bear market pullbacks, and number two, if you've held it 20 years, congratulations, but number two, our option layover strategy would have cut your cost basis in half.
Yeah. Wow, GE, wide range bar scan, kind of comical, but it is trying to hold this area 3 times. It hasn't been able to clear any resistance yet, but 3 pokes at the low, and it's hold up so far.
Yeah, but earnings are coming up too.
I'm not interested in it. I'm just saying, it's finally stabilized somewhat.
No, sometimes you try to bait me. I know you.
Yeah.
And I have to keep reminding you, I don't like bottoming patterns.
Yeah.
Now, on a serious note, if it had an ugly shakeout and then engulfing, then I would like it.
Look at this G Pro. And on Stock Twits, I've been telling them this thing was a dog and going lower probably for 2 years, thereabouts. Its earnings are coming out on the 26th. If it doesn't have some kind of surprise, this thing might be headed towards zero. And they make these great cameras, but I would only assume that technology is changing. Why would this thing been so crushed? And
well, competition, and it was overvalued. Competition.
Well, I know, but overvalued doesn't go from $100 to 5.
It was 100. I thought it was like 62.
Look at the chart. $98.
Oh, maybe I'm confusing that with Fit.
Yeah.
Yeah, look at Fit was a dog. That's the one my buddy George wanted to. Yeah, yeah. Look at Fit. I think it was 62. I was telling him let's core short it. Yep, or 52 rather. 52. See that?
Yeah. No, John, we don't trade on YouTube every day. Actually, Dan and I just this week opened up our chat room that we're calling it the green room. But, if you're not familiar with Dan or I, we've been doing this for about 25 years. And I had another company in the past, and Dan and I started Master Trader, well, I guess a little over a year ago, maybe a year and a half, something like that. And, while we were putting things together, it took us a while before we decided to do the chat room thing again. But what I plan to do, from the room is, at around 9:15, most days during the week, I'll do a review, at 9:15 into the open. And I think tomorrow I might keep the YouTube thing open tomorrow again. And, since we're just starting out, of course, we want as many people as possible to see what we're doing here. So, of course, you'll consider, being a subscriber and a permanent part of, in the room and participating in what we do. And so we do, besides the trades, of course, which is what everybody's interested in to make money, we do a lot of education as well. Especially, as things get quieter. I mean, we take off the middle of the day unless things really start to perk up. But, we spend some quiet time talking about patterns and strategies and so on. Everyone's interest besides making money is to learn, so you can do it for yourself. I copied something. I don't know if that actually went through. I guess it did. Not used to. Why did I press this? I don't know.
We're at 65.
How do I subscribe to your daily chat? I would like to see how you handle trades that go against. I've seen some of your YouTube vids. Oh, sure. Well, you know what, John? I'll probably do an open room. I'm considering just to do an open room so you can come in and just check it out next week. I would send out an email, but if you're not on our email list, just go to, what the site is, and just sign up for the free chart of the week, and at least you'll get on the list and know. But be here tomorrow. I'm going to broadcast on YouTube tomorrow so you can see what we do, and you just might see what happens if something goes against us. I'm hoping, of course, that things go in the direction that we believe that they will. This market goes higher, but if it doesn't, you'll have a prime seat for watching us manage what isn't working.
Yeah, Greg, take a look at Tesla. That might be ready
to go lower.
Well, call spread, and even tomorrow, I'm checking the juice. The 310s for tomorrow, only 30 cents. Not worth it. And I don't want to go out 8 days on that wild animal.
You see, I like this kind of a pattern. I mean, it's held up today, but for day trades, So if it is weak, I would like, if the market is weak, I would like if this could go lower. And I like it. If you're not aware, I think I read, what was it? Yeah, 2 days ago, Goldman came out and said it was going to go to $195, and Elon Musk tweeted out there, "Go ahead and bet against it. Let's see who wins," something like that.
Really? That's funny.
It was like, whose side are you going to be on, Goldman or Musk? Something to that effect.
That's funny.
Actually, as far as the room subscription goes, I don't even. Yeah, it is live. We did make the page live for the room a few days ago. About a minute to the close here. Not a great day overall, meaning the close here, and just to look at that daily bar there, it's got a small tail, but overall, clearly buyers were stepping up today without the very deep pullbacks that has happened recently. So we'll see what tomorrow brings. Let's see what the Qs did. Little stronger, a little less of a tail on that daily chart. IWM, kind of a neutral bar overall with the body in the middle of the range, but higher high, higher low. XLF looking. That's a terrible noise, Dan.
It's a fire truck going by.
Mm-hmm. Yeah, this home builders, right? They just whatever trying to bottom out there, and construction coming in deep. Yeah, VIX just kind of. Well, let's see what the actual VIX is. Moved down today. It did what it's supposed to do. Not a big range, as the market moved up. Yeah, we'll see. We'll see what tomorrow brings to us. There's what was up on the day was the airlines. Just flip this over. Just stabilization after a good crushing. Which looked like a continuation pattern looking at UAL there. And Delta reported its earnings today, and I guess they were decent as it gapped up. Maybe the market helped it as well. But, just overall a pretty sloppy mess. All right, everybody. You have a great night, and we will be on tomorrow. Let's see how this week goes out.
Yep. Have a great night, everybody.
Have a good one. Bye-bye.